We have a ginormous monopoly board and thousands of dollars. We're playing with real money. We have 4 contestants. They're the winner of the merge contest, as you guys knew. We flew them down. They're going to be competing. 3 are going to go bankrupt playing Monopoly, and one of them's going to win all the money and go home with a fat stack.
This week, I want to introduce to you about Real Estate Investment Trust, or REITs. Singapore is a low-tax and low-benefit regime. You must be self-sufficient to stay financially free. As a country, we are fantastic for wealth accumulation, retirement planning, and estate planning, as we have no capital gain tax, no dividend tax, and no estate planning tax. In the SG finance space, REITs are commonly used as retirement tools. For people near retirement, REITs are often used as an income supplement when your net worth is above a critical mass. When your life stage changes and if you are changing roles, REITs serve as the alternative paymaster, and you can choose to get recurring income quarterly. The better managed portfolios can reach as high as 7.18% rolling 12-month yield. That means for every $100,000 invested, it can provide approximately up to $7180 on a yearly basis. So, how do REITs make money? It is quite straightforward. Think of them as companies that own and operate income-producing real estate. The primary revenue stream comes from rental income. They acquire different types of properties, such as shopping malls, office buildings, hotels, and even warehouses, and then lease them out to tenants. The rent collected from these tenants is the main source of earnings. To maintain their tax advantage status, they have mandated distributions and typically distribute at least 90% of the taxable income to shareholders as dividends. This makes them particularly appealing to income-focused investors. So, why are REITs so popular? Firstly, Singapore is a land-scarce nation. Land is limited, they aren't making any more of it. REITs unlock access to prime real estate, generating consistent rental income, provided the tenants continue to be there. Singapore property also enjoys capital appreciation if the value of the properties increase over time, which can lead to an increase in the REIT's share price. A portfolio of well-chosen REITs affords a double wing, also known as 双赢, steady income and potential capital growth as property values climb. Secondly, keeping the taxman at bay. There are not many ways to make money without the taxman wanting this cut. For example, when companies make a profit, they must pay corporate tax, but REITs operate differently. If they pay out 90% of the taxable income to you, the unit holder, they are not required to pay taxes on that income. It's a double tax win, also known as 双赢. The REIT avoids corporate tax and it avoids income tax on your dividends. This is a powerful advantage, making REITs a tax-efficient cornerstone for your portfolio. Thirdly, would you like to own a shopping mall? Ever dream of owning a shopping mall, multiple hotels, or be the game master of your own game of Monopoly? REITs give everyday investors access to high-value properties normally out of reach. In Singapore, we are blessed with plenty of choices, from retail REITs at Woodlands, Yishun, Harbourfront, with its malls and office towers, and even healthcare is on the table, with REITs that own real estate that boasts a trio of Singapore hospitals, namely Mount Elizabeth, Gleneagles, and Parkway East, and a vast network of nursing homes in Japan. REITs also offer geographical diversification, with holdings both within Singapore and internationally, allowing you to expand your reach outside our island. Fourthly, long-term growth at a reasonable price. REITs aren't just boring for being the slow and steady type, maybe sometimes a bit boring, but let's be clear, sexy trends come and go. Nothing is boring about a solid dividend. A recent SGX report from Q4 2024 shows Singapore REITs and property trusts currently offering an average distribution yield of 6.9%, while trading at 35% below the average book value. This is despite the high interest rate climate that have pressured REIT prices since 2022. Let's not forget that if unit prices fall, the distribution yield goes up, making the investment more attractive. In other words, if you buy, you stand to get paid more in the future. Interested to own a piece of some of the best property in Singapore at a reasonable valuation and run by professional managers? Work with your trusted financial advisor now.